How's it going? Lots of crazy stuff going on in the markets. I figure we go over an update. First things first, if you don't know, we have everything done in the market analysis. I explain what the main issue right now is, and it's the Strait of Hormuz, which is the river or whatever. It's a big river that controls the whole passageway supply chain for oil. And well, Iran is kind of blocking that whole passageway, and that's kind of the reason why oil prices will most likely go up. But we can see XLE, it's the oil ETF. It's already gone up very, it's already pretty high this year. We traded it, we sold it, and it looks like we might have sold it too early. Um, I think it might go to 57, 58, but we have to be careful because we could get a gap down and then we pretty much recover. So right now, futures did open up at 1%, but I think we are down to like 0.7 in the overnight market. So there's a good chance that the market opens up, market opens up down, and then we most likely I don't want to say we recover, but we might not go green, but we might definitely be better off than what we were. So obviously, the line in the sand here I put is 592, and it's kind of where we've been tagging for the last couple. Actually, for year to date, we just been hitting this huge line in the sand, this whole support line. The most important line is the 200 weekly moving average, and if we do break down below 592, there's a good chance that we might go to the previous lows in November of last year. It's either we stop around here at 580 or we tag the 200 weekly moving average of 586. However, if we look in the past, anytime we break below the 200 weekly moving average, the chances of us going down to the 100 EMA and lower is high. So it's important that we hold this 592. Otherwise, unless we're lucky from last year of August, right? Unless we're lucky from the move in August, we might just tag 576, which is the orange line over here. And I believe that is the 50-day EMA that we could possibly recover. But for now, it's not the end of the world. I'm not trying to make you guys panic. I'm just trying to make you prepared because the more you know, the less you fear, right? So right now we're touching, I believe that is the 20-day EMA, which is the red line, and we've been holding that structure all week. But Nasdaq is a little bit more volatile, so maybe it's better we check out SPY and see what we're going here. So the SPY has a better support line on the 20-day EMA. So as long as S&P holds above 678, we're still in the bullish zone. But again, if I had to put the trend line here for this support from November last year, it tags us up right at the 200 weekly moving average. Now, the yellow line is one of the most important long-term lines and probably the best place to be buying stocks. But like I said, if we break below 647, which is a 50-day EMA, possibly go to 603. So just things you need to be cautious of. Now, I do expect, like I expect March to be actually bullish. So because January, February have both been flat. I mean, sorry, January has been good. February was flat. But usually when February ends, flat or positive, March most likely, due to seasonality, does seem to be stronger. So we'll really have to see what happens. But I do think we got one more pump left into this before we get an actual midterm correction, probably around April to most likely August. But I think September, October, November, December we'll probably finish much higher. Now, my main concern with oil prices going up is that inflation might go up. And if inflation goes up, well, then then they start raising rates. And we don't want that. We don't want the rates to go up. We already saw that inflation was cooling down to 2.4%, and gas and oil is a large part. So if this war continues to carry on, we could see the CPI inflation actually go higher for the March 11 report. You know what? Let's look at what the Cleveland Fed has forecasted for CPI in February. So it is coming out. They're predicting about 2.4% CPI. So we are expected to be much higher which is a bit scary. Oh no, it's in line. We'll be fine. We'll be fine. Let's see. Most likely, we'll probably see in in March's report or April's report of if inflation goes higher. All right. Just to let you guys know that there's nothing to fear when it comes to war, and I added these charts here. We have a 60, like, in previous times when there was a war, if you bought the dip, there's a 60% chance win rate that we go higher, right? So it's not something we should fear. If anything, every single time we had a war, the markets only got higher. In fact, I'm actually happy that the market might dump on a war because it'll be easier for us to buy that dip. Now, some people say, well, the Russia-Ukraine war, well, the markets were low for a long time. But don't forget, we were also in a hike rate phase, right? The Fed were hiking the rates, plus prices kept going higher and higher, and Russia was invading Ukraine, so it was a bad time. But now we have a war, but we also have rates being cut. Now, again, it all depends. We gotta make sure that oil prices don't go up. And I just filled up gas today, and gas is already high, so we're already seeing downside on that. We released the portfolio update today, guys. And if you guys can see, I am currently only 12% cash on my position. However, if you look at it based on my market weight, which is a 500K portfolio, my cash position is only about 10%. Again, the portfolio strategy goes back to 19% ETFs. That's not exactly what I wanted. We actually want My whole goal is I want 30% ETFs, 60% core stocks, and 13% in moonshots. And unfortunately, I'm going above the moonshots because I have been buying a lot of moonshots this month. Primarily, we've been buying a lot of Nebius. You know what? Let's go into this one. It'll be easier to see. We've been buying more Nebius stock. It is now one of the largest positions we have in the Moonshot portfolio, almost a $7,000 position. The Symbiotic. I'm trying to increase my iron position, but we really need to watch what's going on with iron stock because, well, the the main support line we have to hold is around this level right here, which is around 40, and we're just tagging that. So if we go below 40, there's a chance that we're not, some of these moonshots they actually fall below the 200 weekly moving average. So we probably might fall below 30 if we can't hold, and it looks like we are going to be falling tomorrow because iron is down in the pre-market. Sorry, the extended hours. So something we need to watch and see. But yeah, guys, that's the update right there. We have the buy zones. If you look, Google buy zone 252, so this is the deep buy zone, meaning if we get into a full-on correction crash, that's probably where we're gonna go. So I'll show you guys how we're viewing this. So let's pull up the Google chart. So this is how you can look at it. So Google, the buy zone I wrote is 294. It's currently trading at 311. So 294, I think it's somewhere around here, right? Just above here. Yeah, 291, 299, 294 would be a good area to buy. Now the deep buy zone, what did I write? The deep buy zone is 252, 215. And it lines up directly with the 200 weekly moving average. And it's kind of where I want to be buying. But we need to see what happens at 300. All right. If it breaks below 300, I need to change that. I think the buy zone is actually changed to probably around here 285, 300, yeah, 290. Around 290 would probably be the buy zone. But that's pretty much it, guys. You guys follow the buy zones over here. Same with the moonshots. We did add some stocks into the stock picks. The yellow means they're new, and sometimes it could also mean that you gotta look at it based on the 52-week drawdown. Like Avgo, it's down 20%. It's technically a Mag 7 or a big tech, so that would be flashing as a buy signal. And we'll look at the Avgo chart. So Avgo, I probably would buy it around 251, which is major support, but it's not a bad idea because we are in the buy zone. Like this is the 200 weekly and the 50-day moving average is usually a good place to buy short-term dips. Obviously, if it breaks below, then you gotta wait for the next support and next level. But yeah, that's the update on there. I might update a more visual portfolio where you guys can see that. But you can also go up and if you're just an ETF only portfolio, this is primarily what I want you guys to follow. You got the S&P 500, you got the Nasdaq Gold, and then you got the Canadian ETFs, and then of course IEMG and all those other international ETFs. We also updated some information in the individual stocks. Um, stuff for Cloudflare. I put a sample report if you guys want to check that out. But we are seeing some upgrades on valuation. Like CCO is becoming super overvalued. But yeah, you guys can also check that out. What else do we have in the market analysis? The only thing I guess I can say, guys, is we have to wait and watch and see what happens because I primarily think that um, that this war should be over pretty soon, right? Um, did I add the tweet? But yeah, you guys can check over here why I'm not really panicking, right? We had the updates on my Twitter, but Trump doesn't want this market to crash. All right, we know that for a fact. So whatever happens, it might end this week, and it's very important we see what goes on in the speech tomorrow morning. We also have ISM at 10 a.m., so watch out for that 10 a.m. slam. But these are the events for the week. The most important one will be tomorrow at 10 a.m., which is the ISM manufacturing. We got ADP employment. Um, of course, U.S. employment report and jobless claims. So we have something important every single day. The most important thing to watch would be the U.S. employment numbers and the ADP numbers. So less numbers, more chance of a rate cut. In terms of what do we have, I'm watching AST for earnings. CrowdStrike would be good for our cybersecurity stocks. Of course, we got Avgo. We have Avgo reporting, Marvell, Costco. So a boring earnings week, but you can say that we have a lot of tensions going on. Another breaking news: Amazon data center was bombed in the UAE. So now we're probably gonna see some headlines where things are being affected in the Middle East. And remember, the Middle East was a big investor for AI and Trump's investment initiatives. So yeah, guys, I hope this helps. I can't say much because it's the weekend, but you know, pay attention to what the headlines. I'm not really panicking. If anything, this would be a great opportunity to be buying the dip. And if you want to see more stock ideas, they're all out here. Tom Lee's holdings were also updated. One thing about Tom Lee is he's been pivoting into a lot of oil stocks, and I'm seeing he's buying the top. So it might not be a bad idea to be buying some of these oil stocks, even though he's chasing them higher. So it'll be something good to see. I mean, Tom Lee, yeah, you can make fun of him, but in terms of stocks, like he's not a bad stock picker. So we'll see what happens there. But definitely check out this channel, guys. Oh, you know what? Let's look at crypto too. So I did a small bit of buying on crypto, but that doesn't mean I'm bullish. It's just a great place to be buying, crypto. That's all it is. Doesn't mean I'm bullish again. We have our lower levels for Bitcoin. 65, 55, that's where I think we most likely go. But I do expect a short pump, maybe to 75, maybe to 85. We'll see. But either way, we're at a nice support, so why not buy the dip? Anyways, guys, we'll see you guys.